Long way. What's
Nothing.
good, brother? What's good?
What's up, my boy? How you doing?
Been chilling, brother. You? Hope the same goes for you.
Yeah, bro. New month, new paper. I hate the same shit different day. It's a new day, new money. Let's
Yes, sir.
go.
Yes, sir. New day, new opportunities. Yes, sir.
Hey, 2% boys in the building. That's all I want. Base hits. 2% a day keeps the fucking brokenness away. You feel me?
That's the way, man. That's the way. It's the consistency over anything. Consistency is
Bro,
gonna
what's
get you
crazy
there.
is fucking all the new names in the chat, bro. Shout out everybody that's new in here that I've never seen before. Brandon, F Bueno, Ebo, that's the fucking OG, the GOAT, B Nails, Batman, fucking all y'all, fucking Andrew, Gabriella. Oh, that's a female? Maybe, I don't know, maybe. If
Oh,
you are welcome, you know what I'm saying? Like, that's rare. And I'm just saying because it's rare to have the females and shit, but
yeah, 100%,
hey,
hundred
they
percent.
welcome to shit. And them child and you're not P. We in the building. Let's get it, Flo.
Let's get it. Let's get it. Two more, then we'll get it started. All right, all right. One more minute. One more minute. If anybody has any questions, feel free to open your mic during this. Ask a question. Feel free to interrupt me. It'd be perfectly fine. You can ask it in stream chat, crypto chat, wherever. We'll get this started in a few seconds here. All right, all right. Welcome back. Appreciate everybody popping out on a Friday night. I know y'all would probably want to do something better right now, but y'all are here learning with me, doing some education, right? We're going to get into this. Like I was saying earlier, there's not going to be a lot of setups personally that I am looking for coming into the weekend. Personally, I want to allow the volatility to settle, the rat race to finish, so we can figure out our bias and catch those sniper entries on trades. Today, we're going to be talking about indicators. Indicators is going to be a huge thing that we're going to be talking about today because there's so much FOMO or FUD around indicators, right? A lot of different beliefs around indicators, a lot of teachers that teach different things about indicators. I'm just going to give you my personal thoughts on it, what I believe indicators to be, the pros of indicators as well as the cons of indicators, and how I utilize them to my style. Um, Again, we're also going to talk about retail versus non-retail, what this means to me, and how you guys can get a little bit of a better definition as to what it means to you guys when I talk about, retail traders, right? The uninformed, the money. Whenever I mention anything like that, hopefully it'll give you guys a clear list. So today we're starting off on this. We're gonna make a table right here, right? On this left side, it's going to be our retail, and this right side is going to be our non-retail. Just to start this off, giving a definition. When I speak of retail and when I speak of uninformed money, uninformed. When I speak of retail and when I speak of uninformed money, I speak of money that is blindly entering the market. Okay, you're buying blindly, you're selling blindly. To me, that is considered gambling. To me, that is considered retail, because one, you don't know why you're entering, and two, you don't know why you're exiting. If you are entering or exiting, right, just because you are up a certain amount, does that have anything to do with any sort of plan, right? Or was it just, if I make 100, I take the money out, right? To me, that is gambling. Increased risk due to loss, right? If you're in a trade where you are red and you keep averaging down or keep averaging up, because you believe it's going to go one way, you're so convicted, right? At the end of the day, the market's going to move how the market's going to move. You can't control that, right? So just because you're putting more money in a position or trying to make it work for you does not mean it's going to work for you, right? In this game and within these charts, right, the best way I have found to approach these, as far as no noise, as far as looking for a plan, right, setting a plan and then seeing the steps, the footprints, the hints come out to me, right, is literally from allowing the market to show me signs, right? So now I'm already less stressed out, because I don't need to worry about, oh, if I make this, then I can do this, yada yada yada, right? All of this unfeasible thought process that won't apply in real life applications, right? And that's just going to bring emotion, FUD, whatever it is, right? And all of a sudden your account P&L, right, is looking like this. You got one trade, back down, back to break even, and then all of a sudden the entire time you're trying to get break even, or you're making no progress, right, over a year of P&L, versus taking trades with plans, right, with certain stop losses. So if you are stopped out, right, losses are very small and your wins become large, and all of a sudden your P&L, right, is through the roof within a month, 2 months. You saw 21st Longway in the chat, he was just talking about it, man. Crazy month. Shout out to him for real. But
Appreciate that.
yeah, 100%, brother. But with that plan, right, he's got a plan. He told you, he said it right when he hopped in, 2% a day. That's all he's looking for, right? So if he can find plays, find those setups, right, that are going to allow him that profitability, and allow him not to lose what he needs to lose, right, per his plan trade, then he can start to see great results, and you see it take off, right? That's when the ball starts rolling, and then that's when we start to really enjoy this game, get into this game, and start to make it work for us, right, in real life. So retail, right, is that gambling, basically, the uninformed money. You're blindly entering. So let me go ahead and put some bullet points down for you guys, if you guys want to write this down. We got blind entries, blind exits, over leveraging. This can be plenty of things. It basically, in a nutshell, right, just means not having a plan when going to place a trade. Just put down over leverage, and then we'll talk about now what I consider the informed money, quote unquote smart money, right? How we want to trade, right? That's just setting a plan. So you can utilize what we're going to be talking about today, right, with indicators and different tools given to you to be able to still trade, to still formulate a plan based off of previous data, right? Even though you are using indicators or whatever it is, to still make a profitable trade with a planned entry and with a planned exit, right? Let's go ahead and talk about our informed money. All right, so our smart money, we talked about setting a plan. Based on previous data as well as new data. Right, so instead of blind entries, blind exits, one, we already have a plan, right, based on previous data. Let me go ahead and previous data, as well as new data given to us each day, right? We're constantly watching the order flow of the market, constantly understanding that each day is going to be a new day. Yes, we're still looking for the same behavior, but it's not going to be the same thing, right? It's not going to be a recurring pattern that we see every single day. So we're setting a plan based on previous data. We're using confirmation, which is using multiple datas, right? Or datums. We can't just use one data point to make anything, right? Even in life, you can't use one data to make an assumption or datum to make an assumption about a person, right? If you're going to meet a person or talk to a person, if they say one thing or act one way, you can't use that one thing and base your entire judgment off of a person's character just based off of that, right? We need more data to comply how or figure out how a person is either feeling, acting, or any type of way towards us, right? That's just a quick little reference. But logical entries. Right? It's setting a plan and having a logical entry and an exit, right? Not over leveraging, managing risk, utilizing correct risk management. Right, so smart money, informed money, literally just means having a plan, knowing where you're going to enter, where you're going to exit. That's all it is to me, right? It is setting a plan based off previous data to get something in the future. So we have our retail money, blind gambling to me, and then our informed money, setting a plan, getting ready for a trade, right? So with this, and with this being said, right, we're going to now get into indicators and how they are used with smart money, why they're quote unquote scoffed by certain smart money traders, right, and why some tell you not to take it, right? So with indicators, when I first understood indicators as indicators, right, indicators are showing you data that is happening in the past, right? Previous data that is making up this certain indicator, which is why I don't even like the word indicator, right? Because it's basically just a tool that's showing you something that happened in the past. Now we can use this for future entries, right? But there's a difference between one confluence and a difference between two confirmation, right? So with indicators, right, if we're using a couple indicators, indicators can be literally anything that is given to us, right? It can be Fibonacci, it can be the EMAs, any VWAPs, right? Any type of tool that we're using that is not the printed data that is given to us on the chart in the form of candlesticks are considered those indicators, right? The issue that I personally found with indicators when I first started out was only the opportunity of profitability. Now, what does this mean, right? So what this means to me is, as with an indicator, just to draw something out real quick, let's say this were an EMA. All right, and let's say price was traveling across this EMA. Right, just very sloppy, whatever it is. I'm just making up a general trend, right? So let's draw this as red. Okay, so we have our EMA, right, in the middle of our trend. So what I personally found to be the issue and why it didn't work for me, right, when utilizing indicators, why I stopped utilizing indicators was just the opportunity for profitability. Now, what this means is when I figured out these concepts, right, these smart money concepts, accumulation, distribution, Wyckoff, liquidity, everything that holds within these quote unquote smart money concepts, I was able to find setups, valid entries, right, and risk less, a lot more than I was able to utilize an EMA, meaning, right, if price were to push out, right, and then we see a change of character or a break of structure, price moves back down, and there's demand down here, right? Let's say our EMA is traveling like this. Right, we got an entry over here on the EMA, we caught a pretty nice long, whatever it was, right? if you're playing the EMA. But now I have to wait if I'm playing the EMA, right? If I'm just utilizing the EMA for my trades, this certain number of days or hours, however long it is, until price can come back into now the EMA, right? And then I can look to utilize a trade here. Now, the issue I found with this was when I figured out market structure, figured out smart money concepts, right? I said, oh, okay, there's a break of structure here. We had supply that was created here. And now look at this profitability opportunity, right, on the way back down. Now I already have twice the profitability opportunity that I was available before utilizing just an EMA, right? So it's not bad to me, right? All it was just giving me more opportunity to profit on each move versus waiting for a singular move, waiting for a certain number of days, waiting for to tap back into this. Because again, what if this taps back into the EMA and then breaks the EMA down, right? Now all of a sudden this trade is massively in profits, right, from up here. But if we wait until the EMA, right, to now trade this, to trade a break and retest of this zone, my target in my R&R has now greatly decreased as well. So those were two things that I saw or noticed, right, when trading certain indicators, and how I said, okay, this is why I want to stop that, right? I wanted to stop that. I wanted to allow more profitability opportunity and clean candlesticks appearing on a chart, right, to be able to take trades. Because again, remember, you are not the only person looking at this chart, right? There's billions and billions of people, billions of dollars, billions of money in this chart, in these charts that you're looking at, right? These assets. So they're all setting limits, setting stop losses, right, underneath EMAs, whatever it is, because they can go ahead, press this, and find an EMA, put it on the chart, and trade off of it, right? It's easy to them. So using an EMA or an indicator can still be probable, and you can still utilize this, right? But we also use other confirmations to be able to take trades off of them. We're not just saying, hey, it broke under an EMA or broke under a certain indicator, so I'm going to go ahead and take this trade, right? That's only one datum point, like I was talking about before. We can't make assumptions, basically. So that was the first couple issues that I had found with utilizing indicators. Was the profitability opportunity that it was given to me. Now, second was the fact that everyone basically uses them, right? They're available everywhere. So many people can go look them up, right? You can press this, go press the 50, the 200-day EMA, whatever it is. If I go to Google, right, and look up best EMAs, whatever that one pops up with, and I go choose that indicator, right, and throw that on and try to trade it off of. If I am smart money, right, if I am a hedge fund and I need retail liquidity, I am going to go after the easiest and most applicable liquidity available. And what is that liquidity going to be? Those people using those indicators as confirmation, right? Because then they're setting their stop losses over those or under those, and they are easily manipulated. And then all of a sudden they blow accounts, right? Because they don't know exactly what they're looking at. So with this being said, and with everything we talked about now, we're going to go ahead and dive into a range here. I've shown you this range before, and I've shown you these plays before, but we're going to go ahead and go through the data of this, and I will show you exactly where we can utilize indicators with this, as well as understand how they can be false, right? False leading. So again, going over this, we literally went over the same exact range last week. This is why I love that I'm doing this stream series, so I can show you the same range, show you all the data that's given to us within a range and how you can apply that to anything that is popping up on any time frame, right, with these charts. So looking at our range, let's play this out a little bit. Right, we started to see some consolidation within the zone. We understand that this entire area is an area of weekly demand. If I show you the weekly chart in 1 second. Right, so that consolidation before the impulsive move. If we do the candle before the candle that broke structure to the upside to refine our zone, that impulsive candle. right? We're looking at areas like this, institutional candle right here. But as far as my demand goes, we're looking at a zone like this. Let's go to the 4 hour. Bring this back a little bit, apologies. All right, so as we're coming into this zone of demand, price is starting to create those equal lows. Right, it's slowing down as we're starting to approach our zone of demand, creating equal highs, showing me that late shorts are getting in trades right here because of this consolidation. They believe price is going to continue to the downside, right? Break to the downside, see levels lower over here. But at this point in time, we can see that early longs are getting in trades, probably off the top of that weekly zone that we had shown before. Sorry, excuse me. So with this move, right, I'm waiting for a liquidity raid, right? Mitigation of demand, break of structure, show new demand to be able to look for a trade. Now we're on the 4 hour chart at this time. So if we play it out, we raid liquidity, tap into our zone of demand. Now I'm looking for this high to be broken. Price breaks that high. We see our zone of reaccumulation. If I go on my hourly time frame, look for institutional candles or certain order blocks, right, that caused this and sponsored this move. We're looking at discount. I see an imbalance right here, as well as a zone of consolidation. So I can mark this zone as an order block, an institutional candle. On lower time frames, this is going to be, again, a reaccumulation. If I go to show you that real quick. It'll be a distribution to then accumulation. This area creates demand. Again, you see that impulsive candle right here that broke structure. The area before that, that consolidation. Let's go even lower to show you the full picture. Right? Longs were taken out of trades right here. Break of structure upside. New demand was introduced within this area. So let's go back to the hourly now. So one, at this point in time, right, depending on your risk, right, you can take a trade off the top of this zone, stops underneath one, the low, or the entire zone. Targeting the week high and then areas higher within the range, or we can wait for a 1 hour or 4 hour break of structure after mitigating this zone, because again, this could have been just a liquidity rate to the upside following break of structure to the downside. But right now what we're doing is we're analyzing this range from a smart money perspective. I'm showing you a couple plays that were being shown, and then we're going to throw on the indicator and we're going to see that side of the market. Okay, so at this point in time, wait for price to tap into this zone and or introduce new demand. We see price fill imbalances. We see more breaks of structures upside over here. So within this zone, right, even though it didn't tap this demand zone, because price again broke structure upside over here, took out this high that caused a low on lower time frames. Sorry, lower time frames. Let's go to the 15. Right, we can see this area of shorts coming into this zone after this liquidity raid, break of structure upside. Look for the consolidation before that. So here's your break of structure upside. Consolidation before that. You can choose institutional candles within this zone as well. Here's your demand zone if you wanted to refine to institutional candles. Can also do the same, right? And just because you didn't get tapped in over here, you're now available right here as well if you wanted to wait for that 15-minute break of structure upside following. Right, even look here, another break of structure upside, impulsive move is shown, Where's your institutional candle consolidation before that impulsive move? Right here. Let's get rid of these. Right, again, right here. Another break of structure upside. Impulsive move. Is my volume there? Yes. Did it leave an imbalance? Yes. Is a consolidation institutional candle available? Yes. And did I get the 4 hour to the 1 hour break of structure? Yes. And now the 15? Yes. So now I have 4 to 5 confirmations, right, within this trade. And again, I showed you one missed entry, another tapped in entry, another tapped in entry. Do you want to wait for the full break out of the range? Perfectly fine. Go ahead and do that. Break of structure upside. Consolidation before the move with imbalance. Okay, I see imbalance right here. I see consolidation before the impulsive move. Institutional candles or order blocks within that. Yes. Right there. Long position at the top, stops underneath. Again, same exact thing. Okay, I just showed you entry right here. We have an entry over here, right? We missed this one right here. Another entry right here, another entry right here. So 5 opportunities within this point, within this one move, to look to catch this right and take it higher into the range. Again, targeting imbalances, as well as liquidity left higher within the range. So this is now 5 opportunities that I've had to get in along within this trade. All right, so we had the 15-minute break of structure upside right here. If we go down to the 5-minute, right, here's your 5-minute break of structure. This is where your demand is left unmitigated. All right, so now we wait for this to play out. Let's go to the 15. Pull these out a little bit. And play this up to the top of the range. Right, this is overall for just an overall range trade. We got a counter trade, right? Break of structures upside, mitigations of demand, continuous demand being shown. We now play this out. Price starts to show demand being formed. We're starting to get higher lows. Not super healthy to me at this point in time, but if we can introduce demand and continue, then we should look good. Remember that unmitigated 5-minute demand right here that we talked about? We came back and mitigated that, broke structure upside. Here's another entry given within here. So that's now 6 opportunities. Let's go to the hourly, let this continue. Right, we're still waiting for our take profits at the top of the range. Price starts to play out. If we can hit our take profits, start to show some sort of reversal, then we can look to move from there. Right, price comes into our zone. Taps us out at the high here. And then ends up breaking structure to the downside. Now, let's talk about the story of price action, right, as we're moving up in this range. So I just showed you guys about 6 or 7 opportunities, right, for longs based off of our analysis that we do, right, when looking at this, when looking at demand, institutional candles, supply and demand, right. I showed you all the opportunities we could have gotten all the way up. Now, let's understand what's happening right here as we are coming up again into premium of this range. So if I just draw it out like this, Stream high to string low. Anything from this point up is considered premium at this point in time to me. So when we are in premium, right, we're starting to show all these longs, all this liquidity. This is very important. Remember this liquidity right here that we're looking at. Okay, so all of these longs that we're noticing coming up in the range, these are late longs. So what this also means is if I'm looking at this from a retail perspective, right, just looking at it based off of patterns, right, or trend line, whatever I drew. Notice once we break out of that trend line, right, we can start to see where retail is shown. That liquidity that I just showed you, right, is shown on a trend line right here. We broke out of that trend line, retested it, and they're placing long trades, right, with stops underneath these lows right here. That's showing that liquidity being built up throughout this range. Now, let's throw on the indicator at this point in time. We're going to be utilizing the 200 EMA with this one, just to make it simple. We're on a higher time frame, 4-hour chart. Sorry, 4-hour chart to utilize this EMA. So at this point in time, all those opportunities that I just showed you guys on the way up, 6 or 7 opportunities, and we were pretty much already out of our trade, right, at this point in time. I would have had to waited all this time till we broke out of the EMA and then retested the EMA, right, to be able to take my trade. Now, nothing is wrong with taking an EMA trade, right? Like I had said, if you know where to get in and you know where to get out, it is not a bad trade. That is what I deem a correct trade. What I deem a correct trade is a trade that is planned out and that you are in, right, and you are out with a plan, and you are managing risk, protecting yourself, right? Everything is still there. As far as quote unquote confirmation goes, right? But with indicators like I had said earlier, it just gave me less profitability opportunity as far as time, right? So at this point in time, right, if it were to break the EMA, I put my stops underneath the lows or something similar, right? From this, I take it up to supply or something like that. Nothing is wrong with this trade, right? It's still a winning trade. Like I had said, if this was my plan to take it up to some type of supply, resistance, however it is, I'm looking at this area, right, this previous area, and it broke the EMA, and this is my first take profit, and then I set my stops to break even, I'm safe, right? I'm still safe. That's still a winning trade. Nothing is wrong with that. But you guys can see that all of this opportunity that was left for us over here was not shown, right, with the EMA at this point in time. But remember how we break the EMA and we're showing all of this liquidity. So where I just showed you the EMA and showed you the liquidity before I threw on this indicator, we could see that those lows were equal, right? We could see that longs were getting in trades late as we were quote unquote breaking out of a downtrend, whatever it was, within premium of the range. So you guys can start to see where retail gets confused, right? And where they start to long breakouts, thinking that price is going to continue higher. Now, this is where they get in trouble, right? Because we see all of these lows that are being formed, and this is visually showing you where retail entered with the EMA, right? Versus with how we're going to be looking at it. Now, remember, we had a liquidity rate upside. So if I'm looking at this from a smart money perspective, right, we see this break of structure downside right here. Where's the consolidation before that? You can use this entire zone. You want to refine this zone? Here's your institutional candle before the breakdown. Let me go ahead and get rid of this. All right, so you have your break of structure right here. Institutional candle, right? That consolidation, that supply zone with your refined institutional candle within that. Now, this is a 4-hour chart, remember? At this point in time. All right, stops over the high, targeting areas lower within the range, targeting again that same liquidity that was being built, unmitigated areas down the range to look to one, possibly catch a higher low, right? Or a continuation to the downside from the overall downtrend, right, that we are in. So if we play this out, right, we can see that, okay, price doesn't come back into this zone. Is that okay? Is that not okay? Yeah, that's fine. Remember, this is still that institutional candle. This is still unmitigated, and this is still a possible area that we can look to take a trade off of. Remember, look to right here. We have highs that are being left, equal highs. So usually when we get to areas like this or zones like this shows high probability within this trade for me, right? So again, remember, we still have our institutional candle that was left behind. Notice the EMAs, and notice what's going to happen right here. So as price breaks down from the EMAs, we can see that we're starting to create equal highs. So late shorts are now getting in trades. You can see all the equal highs. Those late shorts are taken out. Price is coming up for liquidity up here. We tap into our institutional candle, and then we see the move. So now that all the liquidity has been taken out of the market, the early shorts were taken out of the market after the breakdown. All the longs were taken out previously. So they got taken out right here. They said, screw it, let's short. They shorted right here. They got clapped. They said, screw it, I'm going to long again. And then they got clapped again, right? You can see how they get literally destroyed just utilizing just an indicator, right? But if you were to short this breakdown, get levels over here, right? However you are doing it, if you have that planned entry and planned exit, then you can still make quote unquote a right trade. So we let this play out. We have our areas down here. Price taps into those areas, raise liquidity, mitigates those areas of unmitigated demand that we had down here. Now look at this, right? So remember this demand that we had down here all the way over here when we first showed this, and price did not come back into that zone, right? Price did not come back into this zone, and we were like, well, it created new demand, it continued. Is it just going to break down from here? No. This was the lowest point that caused, remember, this highest point out of the range. So all these breaks of structures internally that we received was due to the very start right here. We're reading the entire story of the price action, right, that is occurring within our trade. So it started right here. This was our demand that we had shown. And then price comes back and mitigates that, takes out all of these longs right here, mitigates that, break structure upside. We now have new demand that is being formed within this area. At this point in time, I'm going to be looking for a 4-hour break of structure upside. Because right here, right, we changed character to the downside. So if I can receive a 4-hour break of structure upside after mitigating areas of demand down here, if I go on the hourly, one, I could be risky, set limits on these zones, or decide to wait for more confirmation. Here's your institutional candle within the consolidation. Sorry, let's just mark that out to the IC. Now doing the same exact thing, my first take profit here is going to be this weak high internally. And then if that weak high is given to us, that will confirm that uptrend. And then I can hold for higher prices within the range, like liquidity out of the range, or unmitigated supply and demand out of the range. I see all of this liquidity right here. If we look to the left, right, pool of liquidity right here, pool of liquidity right here, unmitigated supply within this area and within these areas right here. Let's be a little more conservative. We can use this supply right here. Now we wait. Price starts to show an impulsive move out of the range, right? That's perfectly fine. We understand this area as an area of demand, but look at this as well. Early longs getting in trades. They saw this pump, they saw the retest, and they got in the trades. Here's the liquidity that proves that. So it's a psychological game that we see, right, when we're looking at this these candlesticks, because, oh, price moved away, right? Price broke structure upside, whatever it was. It's going to continue to the upside, right? It broke the EMA. Here it goes. This is a 4-hour chart. It's not going to come back down here, right? This is what they think. But remember, we have areas of unmitigated demand. If price needed to push higher into the range, if price had to come up into this range, we need to fill these orders, right? We need to come down. We need to raid liquidity. We need to introduce demand, and we need more, basically. This is not very healthy at this point in time, right? So let's play this out. What happens? Consolidation, comes back down, mitigates our zone, then we see the move. Just like we talked about before, right? Avoid this FOMO. Avoid this, right? Because this is not healthy at this point in time. We're looking for that mitigation of the move, of the sponsorship of this move, right? We're looking for that demand to be mitigated because price is not going to exceed higher if it does not mitigate this demand. Yes, it could create new demand, right, and continue from to the upside. But at this point in time, we can see that this retest and this move right here caused all of these longs within trades. So now this is giving you even more confluence, right? So again, now that it comes into the zone, you get another 4-hour break of structure, more demand that's created within this area. We want to see a mitigation, right? A pullback into this zone and then a continuation to show healthiness within the market. Price pulls back into that zone. It's sitting in demand now. We're looking for a possible trade to take at this point in time. It liquidates that demand. Remember these equal lows that were created right here. And then we have a break of structure upside right here. So we know this entire area as an area of buyers, right? So once it's in this zone, we're looking for a structure break to possibly play this. Now, 4-hour break structure upside right here. Where's the candle before the candle? That broke that structure point right here. If I go on lower time frames, you will see consolidation within this candle. Right, an area of consolidation. Let's go even lower. Right, area of consolidation if we wanted to refine to institutional candles that are in discount of this range. We're looking at one right here. Again, another opportunity given to us here. Stops underneath the low or underneath the entire zone. Right, again, doing that same exact thing. So here's another opportunity that has presented itself to us. Right, so that's okay. I waited for the confirmation, right, after coming into these zones. We're on the 15-minute time frame now. We have demand here. We have demand created right here. So if we come back into these areas, again, we can look to possibly take some trades. Your institutional candles right here. Let's bring this out just a little bit. Right, so we can look at something like this. If price were to come back into that zone, show some demand, and continue to the upside from that. What we see happen is some reaccumulation, I believe, and then price continues from that, never comes back down to these areas. But we had all of these opportunities, right, presented to us back here, as well as another break of structure here, demand created here. Then let's see if, let's just see how it plays out. And I believe, yeah, we get the continuation. Let's go to the 4-hour, let this play out. All right, so at this point in time, right, we saw another 2 opportunities that were presented to us within this trade. Remember, I showed you these longs back here. We showed you another long from this demand that was right here. Break of structure upside, the liquidity that was taken out, tap into demand, another break of structure upside, demand before that, liquidity was taken out, break of structure upside, liquidity was rated, break of structure upside, demand creation, same exact thing, right, over and over and over again. Now, targeting areas higher in the range, right, this liquidity, pool liquidity, as well as this unmitigated supply up here. But now at this point in time, right, we're talking about indicators, remember. We are at this point in time where we break the EMA. So if I were to take an EMA trade, right, here are my opportunities. Actually, we'll play this out real quick, and then I will show you the opportunities between both. Right, so price finally comes into this area of all of these shorts, right? Takes out those shorts, and then from that we have that final continuation. So, as a EMA trader within this, let's take away all of this. Let's understand counting it. We had 6 opportunities over here. Multiple short opportunities available within here. If we're just playing the 4-hour chart, you had already 2 opportunities versus 1 opportunity on the EMA here, right? Fake out right here. If you're trying to play this EMA, you are stopped out right here, right, from a break of structure upside. But we understand that this is bullish, so we're waiting for price to come back into these areas. So at this point in time, I have around 6 right here. Just looking at this, we'll say this is 1 to 2. We'll say this is 2 opportunities. So that's 8, 9, 10. And then following breaks of structures upside right here. Look, you get a break right here for area of reaccumulation. Another opportunity arise right here. Another break, mitigation of demand right here. That caused this new high, and then the continuation from that. Another high created right here. The consolidation before that. Here's your demand zone. Continuation from that. That's 4 more, right? Just within this one area after getting all of this previous confirmation to the upside that are given to me, right? That I believe that I can profit off of, right? Versus if I were to take all this away and I were to play the EMA, 1 opportunity arose here. Price came back into this zone. 1, if you longed right here, right, then you are stopped out of your trade. If you shorted after it broke down, you are stopped out of your trade. If you longed after it came back over, you are stopped out of your trade. So that's 3 stop outs over here with 1 long that worked out. Over here, you are stopped out of your trade. If you long on this breakout, if you get on the breakdown, then congratulations, right? I don't really see a break-in retest on the EMA for this, but over here, right, here's your long opportunity. Now you get the break, the retest, and then the actual continuation. So the 12 to 15 opportunities that I showed you up and down the range while retail is waiting for 2, right? If they're just utilizing, again, remember, if they're just utilizing the 200 EMA as confirmation, right? So at this point in time, right, one trade is successful, 2 trades are successful, and from that, good month, right? If you profited, congratulations. Personally, right, I just want more profitability opportunity. So that's how I look at indicators as tools that we can utilize, because I can also throw this on and utilize this as a tool to understand where retail's entering, right? I can throw on these indicators and say, okay, retail's getting in here. I can see the lows that are being created, right? We're in premium, mitigating old supply. We broke structure downside, so I'm expecting lower prices, right? Overall, I can utilize any type of retail indicator, right, within that sense, get in their heads, right, and say, hey, if I was retail, would I be longing this? Yeah, I definitely would, dude. It broke out. It looks like it's gonna moon, right? It broke out of this huge downtrend, and it broke the EMA. We're on the 4-hour, maybe even the daily. Right, here's where the daily got clapped. Broke the EMA right here. All it did was raid liquidity to the upside, immediately break structure to the downside, and then from that, we have the entire move down the range. So again, retail got in here, right, and then they got punished for it, just utilizing the 200 EMA. So with that being said, and all the opportunities that I showed you guys today, is there any questions as far as confluence versus confirmation when utilizing indicators? Because I'm going to say this again and again, I don't think they're bad. I do not think indicators are bad at all. I will time from time throw these EMAs up or throw certain things up to get into certain perspectives and understand what I don't want to do, right? If that is trading like quote unquote retail. But yeah, go ahead and ask those questions now. We'll do this for about 5-10ish minutes or so. I can do a little bit of an ETH analysis, but as I had said before, it's just basically going to be the same thing we were talking about yesterday as far as looking for an impulsive move down and then a break of structure upside, right? That's going to be our liquidity rate and introduction of demand or supply. So let's get out of replay mode and look at current price. Remember our consolidation before I move that broke internal structure out of the range is our demand. We have just mitigated that, but we're starting to show some early longs that I believe started to long after this pump that we got yesterday, right? We can see these equal lows that are starting to be formed. So I am looking for price to trickle down, create some more shorts, right? Raid liquidity, mitigate areas of unmitigated lower time frame demand or order blocks, right? Break structure upside, introduce new demand, and then from this area I will be looking to enter, right? And then from that we can possibly see higher prices from the liquidity that we have at the top of the range, as well as the internal breakage structure. So if I can receive a higher low here, that's going to tell me that this is going to be a weak high. And then from that, this weak high plus liquidity is going to give me more confluence as to holding price targets higher out of this range. But yes, if there are any questions or anything like that, go ahead and drop them now. Otherwise, we will end the stream for tonight. I appreciate again everybody popping out on a Friday night at 10 p.m. It's awesome of you guys that you guys are out here learning this with me, doing this stuff with me, and getting better traders. So, questions.
Yeah, actually. So, like, basically, after finding your high time frame narrative, like, from there, you just like refine down and like find zones of unmitigated demand or supply,
Yes, sir.
or
Yes,
like
sir.
what's your like step by step kind of from that?
Gotcha.
Like after finding the high time frame narrative, like what is the the next couple things in order that you would do?
Gotcha. So after we get our higher time frame move, higher time frame trend, whatever it is, let's say it's something like this. Price then breaks structure, right, on an impulsive move. We could say this is a 4-hour chart, and we're waiting for then price to come back into these areas of demand. Overall, we know that we had to break a structure upside, right? We're looking for demand to be mitigated within these zones. So what I'm going to do at this point is I'm now going to pinpoint just the impulsive move that broke structure. Again,
And aim for the area that sponsored that move.
Yes, sir. I want to see price pull back into that area of demand or supply if this is flipped, right? That sponsored this move. And then once it comes into that zone, I want to look for this same exact behavior. So I want to see price come down into this zone. And then on lower time frames to confirm that lower high, I want to see highs and lows created, breaks of structures upside, demand creation, and then mitigation of again demand, and then we continue. So once I have my first higher time frame narrative, I'm now refining this. So I take it down to here. I'm just looking at this side now of the chart, right? Focusing on this side. After I got my impulsive move, and I'm looking at areas of liquidity within the range, areas of unmitigated demand within the range, areas of unmitigated supply, if we're creating liquidity on the way down, right? And that's where we start to get into more of a narrative after we receive our first step.
Okay, so that's basically like your process on taking like confirmed trades, more or less. Like,
yes, sir. So I'm
you watch for that good reaction with volume and all that, and just make sure that like if the reaction is on point, and then that's when you would look to enter a position.
Yes, sir. So with this, we can refine this even more, right? So we have our first impulsive move, right? We're looking at the liquidity, unmitigated demand within the range. Price comes down, taps into this demand, so now we can get rid of all of this. And now once that has happened, once that is demand is mitigated, remember how we said we're only focusing on this side of the chart?
Yeah.
Once we get to that point, once I delete this, I now refine that. If I get a break of structure right here, right, same exact thing that we had before. Now focus this to this. Again, same exact thing. Impulsive move upside, broke structure after previous demand mitigation. Now I look for demand within this range.
Okay, so you just like keep moving the range
Yes, sir.
over
Refining it
to
down
like
from time
the
frame to time frame.
okay.
And the time is power photon little sheet that I have. I'll send it out in crypto chat here in a second or in the lessons tab, but it's going to confirm each one with the other. Yeah. So from the 4 hour to the 1 hour to the 15 to the 5 to the 3, 2, 1 and so on.
Okay, so you basically look for the same like instance
Yes, sir.
from time frame to time frame. Okay, awesome.
Literally
Good looks, bro. Good
this.
looks.
Yes, sir. Yes, sir. Of course, it's the same behavior I'm looking for from time frame to time frame. And you can literally refine this all the way down to the 15-second and catch some crazy, crazy R&R.
Yeah, I see. Okay, so yeah, okay. I just wanted to clarify that. So it's basically you're looking for the same thing on each time frame. Like if it happens on the 4 hour, then you would go back down to you go to the 1
To the
hour,
1
30
hour,
minute.
yes, sir. And then I would confirm a 4 hour higher low or lower high with a 1 hour break of structure and creation of demand or supply.
I see. And what's your preferred like time frame selection? Like, do you only choose a few, or do you kind of just like,
Top down
I don't know?
analysis. I use them all, brother.
Yeah,
From the
fair enough.
weekly down to the 1, even the 15. So
Do you use like the 90 minute at all? Like the 90 minute, 45 minute, or actually,
um
yeah, no,
I
I
got a
see,
45.
yeah, I was gonna say, I see all your things up there. I have pretty much all of those actually, like, but I don't know, I was just curious, your take on that.
Yeah, I've seen a lot, use a lot. I've noticed that once you find one zone, like one impulsive move, you'll notice that every time frame holds some area of significance or holds a certain standout candle or something similar, right, within the same zone on every time frame. Meaning that,
Okay,
meaning
okay.
that if this were a daily trend and this was a daily doji, right, or a consolidation candle, institutional candle, whatever it is. If I go to the 4
Yeah.
hour, I'll see that the 4 hour again has either reaccumulation or whatever it is, and it shows me that same impulsive move that I saw right here within this little price movement or price action in here. So you'll see
Okay,
that
and
like no, go ahead, go ahead.
yeah, one last thing too. Yeah, so the institutional candle is basically just the candle before the candle that broke structure, and that's where supply or demand will be created.
Um, that is for supply and demand. So your institutional candle is going to be the last buy candle before the bearish candle that follows after, or the last sell candle before the bullish engulfing candle. That's going to show institutional sponsorship within the market. What this means is for an institutional candle, right? This is basically telling me where algorithms entered the market because they push price down into this zone to raid liquidity, mitigate demand, and then immediately break structure to the upside.
And then I say, yeah, you see those like violent lethargic candles, as you call them, like just showing that like,
Yeah, showing
um,
early shorts, early longs.
yeah,
It's not movement, right? It's not the trend. It's just basically retail liquidity at that point in time.
okay.
Yes, sir.
Awesome, appreciate it, man.
Of course. I appreciate y'all popping out, man. But with that being said, I appreciate the questions. That was a very good question. I'm gonna go ahead and wrap this stream up right here, and I will post this on YouTube. Go ahead and ask in any comments, DMs, anything like that. As far as any questions, I hope you guys learned something today, and I appreciate you guys popping out again. You guys have a great night.
Appreciate you, bro.
Of course.
Long way, DGen.
Mm.